Omaha, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. And in this video, I'm going to talk to you about why you need to zig when the market zags. Okay, so this kind of falls in line with the video I posted last week in regards to embracing volatility. But I feel like if you are an investor or a trader in this current market when times are so uncertain and things are so volatile, it's very important to keep these principles and fundamental ways of thinking at the top of mind. In my opinion, again, you want to keep a cool head at times like these, all right? You want to stay rational when there's a lot of emotion in the air. Okay, so I'll do my best to keep this brief. This will be a short one. We'll kick it off by just reading a quote by the great Mr. Warren Buffett that I feel applies well to this video. I'll then go on to read you guys just a little something I wrote up for you that sums up my thoughts on the topic, and then we'll dive into what we got back here. So it's just a couple charts that I feel like I'll just show you guys what I see as a few examples of this concept on a few charts. So we got the S&P 500, the Spider ETF, and then we have Moderna, good old Moderna. Okay, so let's kick it off again. Oracle of Omaha: be fearful when there's greed, and be greedy when there's fear. All right, so this is pretty much just a different way of saying the same thing. But again, Warren Buffett, Oracle of Omaha, regarded as one of the wisest and most experienced investors of our generation, if not of all of history. And I think it's very true. Again, market zigs, you zag, be fearful when there is greed, and greedy when there is fear. Okay, so the gist of these statements is to not be a sheep. Okay, don't just follow the herd. There are times when if you're very early on following the herd, you can profit, and that is definitely a strategy sometimes. But for the most part, don't be a sheep. Okay, don't partake in herd mentality, because that's not how you get rich in this game. Okay, that's not how you make money. The herd, the sheep, are not the ones who prosper. Okay, so that said, again, let's go on to reading this little excerpt I wrote for you guys. All right, so when the stock market zigs, you zag. During times of volatility, go against the grain. Just a little message. This message pertains to my mid to long-term view. The short-term and day-to-day price action in a market this uncertain will always be a toss-up. Okay, so that's another important piece that I just wanted to let you guys know prior to reading the rest. This doesn't really go for my day-to-day view. It can obviously be applicable in certain, if you are day trading or something. The concept is applicable to a daily chart, but I'm talking like macro. What I believe is truly not truly important, but more important in my mind than the day-to-day action is the weekly to monthly to even yearly, but mostly weekly to monthly in my mind, just because that's how I personally play the market. Okay, so when others become emotional, you must maintain a rational mind. Rational investors will always have the advantage over the less experienced emotional players. Be it news, hype, or FOMO that leads one to panic buy or sell into a position, you must maintain a sound mind and remind yourself of the fundamentals. If a product or stock is great and a piece of negative shock news happens to be released that causes a panic sell-off, do not succumb to the fear, but keep your hands strong and maybe even double down on your position if you feel confident in the mid to long term. The same applies vice versa. If an asset or stock is going to the moon, don't just go and panic buy in, because it is likely that there will be a better buying opportunity in the near future. When the market zigs, you zag. Okay? So again, this to sum all this up, is just do your best in a highly emotional, highly volatile environment to keep a sound mind and really keep what's important at the top of mind. Okay, I know it's hard to again, when stocks are going up and down, assets are climbing and falling so rapidly, it is hard to actually execute on that principle. But it's very important, and the more you practice, like anything else in life, the more you practice this fundamental way of thinking, the better you get at it. Again, like everything else, practice makes better. Not perfect, but better. Okay, so like I said, we'll go into a few examples of where I played this right and where I played this wrong personally. Okay, so as you can see here, the SPY, S&P 500. This is the top 500 companies designated by the SPY. Or not by the SPY, but by S&P. So this pretty much just sums up the market. So I'm sure you guys know that, but this is a good way of just summing up the entire market into a single chart. All right, so we had this fall down. There's two examples here. We had this initial fall, and this was a few days right here. Let's go to a daily. So we'll measure this in days, or do our best to do so. Okay, so right here we had a week when this fall initially started back in February. Okay, back in late February, you guys all remember it. This super significant fall happened, which was the catalyst for what was to be a crazy another move down. Okay, so this happened for about a week. Again, at the end of this week is when consumer sentiment really fell, and this is where the majority of people thought the market was just going to keep going down. Okay, and like I have reiterated in many of the videos I've recorded, things never just go straight down. They don't just go straight up. Very occasionally, if you're lucky in some specific bubbles and stuff, that will happen. But for the most part, things never go straight up and never go straight down. Okay, so this is where you can see the sheep. This is like kind of in sheep territory right here. What I'll call sheep territory. I'm sure you guys understand that analogy. Okay, so right here, a few days in, the market was absolutely bloody for a few days straight, almost a week. Everyone thought there was a lot of fear around here. So that's a good way to think of this. Okay, is fear. When others are fearful, be greedy, and when others are greedy, be fearful. Okay, so this is absolute fear right here. People are very scared. They think it's going to sell. It's just going to keep falling down. Again, that is a very common way of thinking when there is such rapid movements that are going in one direction. Okay, you get either very pessimistic or optimistic. All right, and right here is kind of where the sheepish area. Obviously, you can tell because there was a reversal. This was in turn a dead cat bounce, which is a little relief rally. So again, things can't just go down forever. So went up a little bit and then continued to fall down again. And then we see that same fear around here. Okay, and it was a little more up and down, but this was a significant downtrend for a solid month. Yeah, I'm sure. Again, this was just like a month ago. I'm sure you guys remember. Okay, so right here is where pretty much peak fear happened, obviously, because that is when we began this pretty long-term reversal. It's still going up, so it's still trending upwards. So this was the reversal point, absolute fear, when the more rational minds ended up jumping in, and they were able to catch this move up. Okay, so I actually, again, like I said, I want to show you guys examples of where I played this incorrectly. So this is where I played it incorrectly. I thought that after this bounce, this was going to be that relief rally, that dead cat bounce, which it kind of was. But I personally took out a few solid size short positions in this area because I was so confident that it was going to have another significant like 20% move down after this. Okay, so that's a problem. Like even thinking like this, it will go wrong sometimes, and you're never always going to be right. That's just not the game. But a lot of people were probably thinking the same thing, and then that's when you see this huge move up right here. Okay, so another good principle to understand is that it's like almost reverse psychology, right? Like, oh, people think it's going up. I was like, it's for sure going to fall, which it did. But then there were big players, and honestly, a lot more experienced players than me. Always remember, you guys are bigger fish out there. They're bigger fish in the sea than you, and there were people anticipating that. Okay, so you always have to keep that in mind as well. Like, play the reverse psychology sometimes. I know this is a game of psychology. The market is a crazy game, and it really is. The more, as we said in the beginning, the more practice, the better you get, like anything else in life. And yeah, it's just live and learn. Always remember. Also, we'll go back to how things do happen in twos. Remember my rule of twos. I've never dubbed it that, but I'll call it that now just because it kind of makes sense, I guess. So 1, 2, and then we're kind of rolling around here. This isn't a great example, but this is the fall is a better example, right? So 1 super significant fall, you'll get the relief, and then you'll have that second, a lot of times even more significant fall. Okay, so I think that's a good transition into Moderna. Again, this is a good example right here. Again, when Moderna first released the news that they were releasing a potential COVID vaccine, you see this spike up in price from $18 to $28. So like went up like 70%. See, you get that initial move up, go stagnant for a little bit, and then get that second move up. So this is a good example of how to apply that rule of twos to when the market zigs, you zag. A lot of times it's after that second one. Okay, so again, if you caught this first move up, I wouldn't consider you a sheep. But and that, like, I don't want to call anyone a sheep, obviously. It's just like, you guys get it, right? So on the second move up, though, after this first move ups happened, the news has gotten out of crazy price action on this stock or asset, whatever it is, because this does happen a lot. This has happened to a lot of assets that just go ballistic. Okay, so you get this first move up, everyone hears about it. It goes stagnant because everyone's not sure if it's going to go up or down. And then it has this second bull rally because everyone's still super optimistic. Everyone who thinks it's going to go down and hope that they can get in after hearing the news is like, oh shit, it's popping back up. I got to get in. And then that's when they FOMO in. Okay, so that's very important to remember. Always remember that a lot of times these do happen in things that are exploding happen in waves of twos. So wait for the first one, wait for the second one. As always, guys, nothing's for sure, but a lot of time after that second wave up or down, it's good to enjoy some of the profits if you made some, because again, it is likely that you will have a buying opportunity in the near future, like I mentioned in the little summary I wrote. Okay, so we'll look at this too. Again, right here, like 1, 2, and then right now we're going stagnant on Moderna. Again, the day-to-day is kind of hard to tell, but on the grand scheme of things, this is how I'm looking at it. So this is what I'm seeing as a bigger version of this. Okay, so we're almost seeing, in my mind, what will be the same thing, just more elongated. So you see the 1. This is phase 1 of the greater bull cycle that I personally believe will happen to Moderna. Not financial advice, but I personally believe that from a technical perspective. We'll just get into this a little bit. This is a bull flag, so traditionally very bullish pattern. You have one crazy move up, and then you hold a bottom line of support and a top kind of just downward trend line, forming that flag pattern. Very bullish, but you guys, not just Moderna, but for all future reference, a lot of times, again, this is called a bull flag, so keep an eye out for this pattern. Very historically bullish, obviously, is why it's called a bull flag. So a lot of times, if it does hold this bottom line of support at the end of this downward slope, it will shoot up. So hopefully we see that happen. And again, I think it will just be a repeat of what happens here initially. So 1 flat 2, 1 flat 2. Okay, so always remember that, you guys. Just the rule of twos is very important in my mind. The more I look at these charts, the more I convince myself of my own theory, to be honest. But yeah, just remember, you guys, a lot of times after that second wave is when you zag. Okay, because that's when when you zig and the majority are zagging. Okay. So those are just a couple examples. I know I wanted to keep this short, so I'll just end it, close it off there. If you guys happen to get any value out of this video, I'd really appreciate it if you guys gave it a thumbs up and subscribed if you're not already. Also, check out all the links and goodies down in the description if you are at all interested in supporting the channel. If you do, I really appreciate that. If not, no worries. But yeah, we'll just close it off there. Always appreciate you guys. Always feel free to drop comments. I always love talking shop with you guys as well. And yeah, always remember, you guys, take action, make waves in these markets. Until next time, peace. Later.